Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 29th of June, 2023. Thanks for showing up today and watching this. This is episode number 2493. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thank you for the sound check. I'll get the Rode mic fixed soon. I don't know what's going on with it. It shuts off as soon as the broadcast starts, so I'm using a headset for now. So I'm not coming across as deep as Barry White, maybe. Okay, so the Convergent Trading pre-market summary sheet this morning, yet again, we've got a mixed open, right? Yet again, we find that the indices, the U.S. indices, are hovering around unchanged. We've had a tendency of doing this for quite a few weeks now, where we start mixed and then make a move from there. This is good for us trading the U.S. session. Not so great for those trading the overnight session, the market regime where the overnight action was in Europe, which was very frustrating because some key price map areas, we come in to find a key price map areas that already been traded and tested, and we're way beyond for quite a couple of years, actually 2-3 years, something like that, even maybe longer. So that's where we are. Mixed risk posture. This morning, Spanish CPI and the German CPI are higher than expected. We do get the CPI from the Eurozone tomorrow. Initial claims came in lower than expected. Looking at the numbers here, 239,000 versus 265,000. That's pretty hot. We did get GDP for Q1 final. This is not a headline number. This is for Q1. It's stale. We're a day, 2 days, today and tomorrow is the end of Q2. So tomorrow we have the end of month, end of quarter, and end of H1 as well for 2023. So these numbers don't really tell us very much. There was a core PCE price in there, came in at 4.9 versus 5%. PCE prices came in at 4.1 versus 4.2. But the number that's really important is tomorrow. That's the PCE and core PCE numbers. There's a tendency that the headline numbers are falling, but the core numbers are not, which have some implications. So we're looking for that for tomorrow. Today, we're looking for pending home sales. The forecast is for 17%. Why isn't there a consensus? Let me see. Just looking at that. Yeah, the forecast is for negative 17% month on month. Looking for negative 0.6 on pending home sales. We have a couple of speakers and the MBS manufacturing PMI, which is a key figure out of China. Other than that, the U.S. banks passed their stress test with flying colors. There's a lot of apprehension about the commercial part, the commercial lending portion of banking. The expectation is that there would be a lot of rot in commercial loans, given that many cities have many buildings with no tenants in them as people continue to work from home and so on and so forth. People have tended to migrate out of the cities during COVID or just basically work from home, leaving a lot of commercial properties empty. We see that here in Chicago. A lot of retail locations are covered up and available for lease. You see a ton of that. There's an entire plaza by my house with a movie theater and everything that is completely vacant. So the idea here is that banks are probably carrying that paper and are probably have some bad debt within them, much like we saw in 2008, 2009. The stress test did check for that, and they found that all 23 banks passed with flying colors. So the bankers are, the banking stocks are doing very well this morning. Um, Fed's chair in Spain says strong majority of Fed policymakers see 2 or more rate hikes by the end of the year, rate raises by the end of the year. Fed's Bostic only been in restrictive territory for 8 to 10 months, just at the beginning stage of what tightening should look like. ECB Centino, we're reaching time when monetary policy may pause, and that we are very close. Salesforce to invest 4 billion in UK on AI innovation. Just pay attention to that for those who watch or own Salesforce. Looking at the auction this morning, we do have. Let me look. Yeah, we do have a multi-distribution profile today. 222,000 contracts. That's relatively good volume. The inventory is 46% long, so not tipping the scale so much as we would expect a recoil. In fact, the recoil had just taken place here, in the last half hour or so, dropping back. The S&P moving back from 44.36-ish all the way back down to 44.19. The range, however, 22.25 is pretty good. This is always, when we come in the overnight range right before the open, is wide, and wide being better than about 16 points currently. This is a good sign. It gives us potential for good opportunity to see some movement, and we need movement. Remember, we make money off of price change or movement, so we want to see that movement. The point of control shifting up to 44.30 this morning. 44.30 was key yesterday, and we find our point of control there. We see commodities taking a hit, crude making a small bounce, but commodities, treasuries taking a hit this morning. One thing you want to keep an eye on. I'm not a macro analyst. I'm learning as I go, but there's an incredible amount of movement and kind of under the cover turmoil going on with the Chinese yuan. It's moved back to some levels that we haven't seen since fall of last year, and the Chinese central bank is really struggling to manage what's happening with that currency. The yuan really is a global currency. It's very important, and the Chinese government finds itself borrowing in the swap and other markets, borrowing dollars in the swap and other markets to flood theirs. So some interesting things there that are happening under the cover. I had intended to pull up a yuan chart and kind of overlay the ES on it to show that there's some correlation there, but I didn't want to go down that road and send you off the deep end. So let's just keep things simple. Here's where we are in the S&P. So we had our breakout from 43.90 or so all the way up to 44.24 2 days ago, and then yesterday we opened right in the middle. We were stuck. You could see the IB was stuck between two single print points from the day before, from Tuesday, and overall yesterday was totally balanced. You could see the point of controls in line with the MC point of control in this region. Yesterday was a very classic balanced day, balanced behavior. So there were some really. I saw a trade early on, which I narrated it on in the Maven's channel of Convergent Trading. Walk through that, and I saw us pushing into the 30, and that was the the final exit there, but just some really interesting. Despite the balance there yesterday, had some really interesting setups in it. But overall, we're seeing that thing that I drew the other day, where we find the point of control shifting down, slowing down, and then suddenly popping higher and then popping down yesterday. This is the TPO point of control. The volume point of control is the same way. The fact that there was movement like this, that yesterday we didn't build on top of the prior day's high volume node, tells me that the market is likely to stall out in the 30s here, and is very likely to see, I still see 43.90 on deck. Okay, point of control being accepted lower. The market, had it been more feverishly lifting as it was on Tuesday, we would have seen buyers coming in and taking the same interest in that point of control around 44.20 as they did on the day of the rally on Tuesday, but they didn't. They went back to the balance point of control, 44.16, 15, something like that, something in that range. Now it's like shifted to like 44.19. But we see them building a point of control right on the MC point of control, and it leads me to believe that we are likely to churn here, which I talked about yesterday. I said, look, after a day like yesterday, coming back into balance, we're very likely to churn in the balance, and that's what we did yesterday. There's some opportunity in there as long as we get some range. And yesterday we had 30 points, 31 points of range. So that's not a bad day to do something with. It's not the old 56 to 58 points that we were used to, but still, that's pretty good for a balanced day. So that's where we are. This is where we remain. This morning we open in range, in value, right below settlement. Settlement is right on top of that MC point of control, and the churn continues. So this is it's important to recognize that the edges, the extremes out of here, are likely to get challenged. We saw that this morning. This morning we pushed to 36.75 and just immediately dropped like a bomb. Yesterday we pushed to 30, immediately dropped like a bomb, went to the other side. Yesterday was contaminated with news, with Fed speakers and ECB speakers and BOE speakers and so on and so forth. But the overall picture is that we have balance with the markets just kind of sitting around and waiting, and so we see this push, and you could see an excess that was put in right on top of, once it got above the prior high of day of the rally day at 44.24. I'm just rounding. I don't want to say 44.25, 44.75, 44 half. So I'm just rounding to the handle. Just get used to that. A few ticks here and there don't really make a difference. They can over thousands of trades, but for the discussion, they don't make a difference. But yesterday we pushed through the prior high a day, and we had an excess, and we just dropped like a bomb. And you see that in the profile. You could see that there was very little interest up there, and it migrated all the way back to the middle before retesting the low, and going sideways. And so what we end up with yesterday is kind of a profile that's heavy to the downside. That looks like one of those figures from not from Stonehenge, the other ones, those statues on the hill. That's what it looks like. Anyway, my imagination is wild. So what are we doing this morning? This morning we open. So yesterday we settled at 44.17 right in here. There was some really good lifting on the close. And also notice yesterday we spent almost the entire day in a negative delta. Easter Island, thank you. Gosh, I couldn't think of it. Notice that yesterday there was just not all that much interest on the upside, right? So we ended up coming back and making a positive delta for a bit, but in this sideways, we ended up with a negative delta again. This is kind of the same as the rally day on Tuesday, where we ran up quite a bit on Tuesday, yet the delta was quite weak. It just seems like the buyers are motivated, but there's an equal force of sellers coming in at higher prices, and it's causing, or when things slow down, it's causing the buyers to kind of get buried a little bit, and that's kind of characteristic of this profile here. So after the close yesterday, or into the close, which I didn't expect at all, by the way, into the close, we had some pretty good lifting. We saw, you could see the delta, the cumulative delta kind of tick up quite a bit here, almost go flat. Most of that was large lots and very large lots. Small lots were selling into the rally, into the close. It floated up, came right back into the mid of the session, and then it started to push higher right at the European Open, started to push higher, and since then they've given it up and it's come back. So we have this multi-distribution or double distribution profile, and we have what is the high of the rally day at 24. We have the mid of today's session at 24 as well. We have VWAP at 24, and we have a low volume node at 24. So needless to say, the 24 is the LIS for this morning. It is the line in the sand. My expectation is that unless we get above there, if we get above there and kind of poke our head and fall off, it's all the same. I wish there was a way to back that out. It'd be nice to have a Control Z to erase the last thing I drew, but if we get up there and then consolidate and then start to push again, then we are likely to take out to challenge the prior day's high, push to the 44.30, and then push the 36.75 and through this thick area, this thick stock zone, and get to the 35 point of control, naked point of control, close that up, and then now we're open to fill in the gap that was left behind from the 20th. If you recall, the 20th we gapped down, and we haven't filled that in yet. That gap, it goes between 44, 45 to 51, something like that. That would be the next target up if we push. If we remain below here, so we are way down here. If we remain below here and we balance out on the open and start to push lower, we're not able to push higher. I'm leaning short. So below the LIS, I'm leaning short. I'm leaning on the potential, the stronger potential, in my opinion, the higher probability that yesterday's low would be tested. Yesterday's low, despite the higher lows, so we had a slightly higher low, an even slighter higher low, and then we had a little bit more slight higher low, and then we had another slight higher low. As soon as these break, as soon as this trend line here breaks, it's likely to precipitate lower through the 4400 and start moving back to where? Where do we move back if we push lower? I'm not going to wait for you because you're about 10 to 15 seconds behind the 43.90, and that becomes the key target. And this morning for me, the key target is 43.90. Unless it takes out yesterday's high at 44.24, the key test area is below. The only catch is you might get neither. You might not get 44.24. You may not get 4400. You may not get anything today. It may just go completely sideways. But if there was some selling, my target's 43.90. If there's some buying, I'm looking for it to push through 44.24. Test, hold. It has to hold. I'm not going to take a breakout of 44.24. It has to hold. And then now I'm targeting 36.75. And then above there, the gap between 44 and 51. That's my price map. That's my plan for the day. Now it's about the market kind of doing what it needs to do to tell me what its appetite is. Okay. So it's kind of like being a chef. I've prepared a bunch of dishes. I don't know what the guest wants. The guest tends to be very demanding and very whimsical and very undecided sometimes during balanced days. But I've got my dishes, and then as soon as I see that their appetite is for one thing, that's what I serve. I serve that particular plan or that particular scenario, and I follow the steps to make sure that I'm in alignment with the market's demand. The market is the customer. I have to align with it. It doesn't have to serve me. I'm not the customer. You think you're the customer, you're not the customer. You're the server to the market. Remember that. So that's where we are. If we look at the relative delta for some clues, because we're coming into balance, if we look at the relative delta for some clues, we see that the short side is really where it's at. You could see us here. You could see that the open in yesterday's high, full session VWAP, mid, the LVN, just so much is stacked at this 44.24. This is such a key level. So much going on here. The delta is negative on all three. So what does that mean? Very important order flow clue here. If we don't get delta lifting on the open, if we don't get that rebalancing, that excess to the downside, rebalancing quickly, the inventory is long mostly, but if we don't get that rebalancing quickly, it is very likely to get offered, and it's very likely to just be sell, 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 sell. And that's the side that I'm looking for today. And again, 43.90 would be the target, which is well within the range of this thing. That's 24, 25 points away. It's not much for the ES to get down there. Okay, I know that's a lot of detail, but I want to give you, I can't give it to you. I want to help you obtain confidence from the analysis versus being told, here's an indicator. When the indicator does this, I do that, and that's, and I'm the greatest by my indicator. That's not what we're all about. We're all about getting you to kind of think through the process and adopt this way of looking at the market as a living organism that has a task, and that is to test and retest and test and retest with the most important objective, or its main directorate, is to find as many buyers and sellers and match them up as possible. The market's constantly seeking balance, and it cannot do that without testing prices, and our price map is just our way of predicting where those potential tests are likely to occur. That's it. Okay, so that's what we're looking at. 5 minutes to the open. I'm not going to go through anything else. The NQ's kind of going through the same thing. The NQ had almost the exact same thing as the ES. They're completely in line. The NQ did a better job of building on top of the high volume node left on Tuesday. The NQ is structurally more sound. It's structurally better. It built on top of the MC point of control, built on the HVN, whereas the ES built below. And so the NQ's got a lot of fuel in it for the next move. And it's also opening in range, in value, against the point of control, against settlement. And so the NQ is likely to be quite noisy at the open today, but there's plenty of volume today, and I expect that there will be plenty of opportunities. I'll leave you with that. Convergent members, we're doing a walkthrough on the NQ today. Hopefully you'll pick up a few things if you're planning to trade it. I'll catch you there. That's at 1 o'clock Eastern. If not, please hit the like button. Find it. It's just below here. Hit the like button. And then if you haven't subscribed to the channel, please subscribe. I'll talk to you soon. Take care.